All right, so today it's time for me to teach you all one of the most imperative things that you need to understand in order to start making more profitable trades. See, when a lot of people get into either Forex trading or binary options trading, or any options trading for that matter, the first thing we do is, we go out, we try to see which indicators are the best, which signals are the best, the whole nine. And what happens is a lot of times we find a strategy, like for example, you guys, my zero gravity strategy, and you see the parameters, you see the rules, you see the confirmations that are set, and you'll see that it works a lot of the time. But then you'll have these times where it doesn't work. And I've actually had a few students who would message me and they'd say, "Man, I'm not winning some of these trades. Do you know what's going on?" And my instinct is always immediately to ask, "Can I see the chart of the trading, like the chart of where you entered your position in, to see where you traded?" And nine times out of eight, and I know what's coming. Like I can instantly see that they're trading in the wrong types of markets. Now, I have covered what markets to trade in and what markets not to trade in the past, but I'm going to give you a little bit more of an in-depth view of what type of markets you should trade in and what type of markets not to trade in. Because a lot of times when I get these, these screenshots when someone says I lost this trade and I was following a strategy, I can instantly see that they were in the wrong markets. So I'm going to go over a few of these different scenarios of positions I would never ever trade in. So you could see something like this. Is what I call trading in the doldrums, and I've mentioned this a few times. The more, I guess you could say, the more well-known way to say it is called a choppy market. Now, in a standard market, what you want to look for is a series of red candles or a series of green candles, and they kind of form a nice trend. But when I say a choppy market, I mean something like this, where every other candle is an alternating color. You could even see right here on the stochastic oscillator how it's a bunch of sharp zigzags, just pretty much going any type of way. I am a musician. I do synthesis. I studied that at Berklee College of Music. So in my brain, I already know it's something called noise. It looks like white noise. Whereas music, like sounds of music, is like sine waves. Where you see something like this is a very choppy market right here in general. But when you see something like, let me see. When you see something like this whole thing is choppy. But when you see something like this, let me see if I can find one for you. Actually, let me just change and see if I can find one for you guys. Okay, when you see something like this with nice sine waves, you can see how there's like a bunch of greens in a row, a bunch of reds in a row. Now, it doesn't have to be, you know, six green candles in a row. If you see something where it's two or three green candles and there's a lot of, I'm just going to say this in like basic terms so you all can understand me. When you see a lot of vertical movement, that's when you know you're in a pretty good market. And you can see the stochastic oscillator, for the most part, it's reflecting that, as you can see. It looks like a sine wave. So when you see that actual sine waves, you know, okay, this is a healthy market I should be trading in. Whereas something like this, where I was just looking at the other charts, where you see alternating green and red candles, like this, it's a choppy market. Even though that's not the choppiest of market because there's still some type of movement. But something like this, where you see, green, red, it starts to get a little bit better. But overall, this is a choppy market. I would never trade in a choppy market. Also, the main focus that you really should be looking for is real momentum because momentum is the key of knowing which way the trades are going to go. If there's no real momentum, how are you going to trade with the momentum or against the momentum? Something like this is perfect for the 50-yard pass. As you can see, a bunch of green candles and a downward trend. And once it hits almost at the 50 mark, it reverses back down. This is what I would actually call a 25-yard pass. But it's a little bit riskier, and you have to make sure you're in a really strong trending market in order to do it. But as you can see, but then it starts to do the alternating green, red. And you can see the stochastic oscillator is reflecting that. So as a rule, I always avoid, you can see right where my mouse cursor is, I always avoid markets where it's an alternating of a green and red candle. And there's a few reasons I want you all to understand. The main reason is because when you see something like this, where you could see a bunch of greens right in a row, right? You can see, again, it reflects that. You can see there's a clear momentum. So if you want to trade with the trend, which I don't, I do trade with the trend, but I trade to reverse in the direction of the trend. So you can see a bunch of green candles. I would wait for something like this, where you see the wick at the top and you know that the price is about to reverse back down in the direction of the trend. Pretty much all you're doing there is you're trading pullbacks, right? And I've covered that in previous videos, trade with the trend, like the 50-yard pass. But here it went all the way up. It did 50-yard here, and then it did the full Keltner channel right here. But at the end of the day, you were able to see the momentum. Now, I'm going to see if I can find something to show you another trading situation I avoid. As you can see right here, you can see how there's 3 greens in a row, and then boom, it shoots down because this is a healthy market. It's not choppy. Something like this, let me see if I can show you right here. Right here is perfect. Let me zoom in real quick. This is what I always say to avoid. Back in the day, I used to call it trading in the doldrums. And even in my early trading journey, I knew I needed to avoid it. And the reason I want to avoid it is for 2 reasons. Number one, there's no clear direction that it's going. How can you trade with the momentum if you don't even see momentum? There's no momentum here to trade with, and there's no momentum to say, okay, when it gets to this point, I'm going to trade in a reverse because I know the momentum's going to shift. There's no momentum. You're not getting any data. Looking at this, you might as well be looking at a blank space because there's nothing there. There's nothing that's teaching you what to do. Meanwhile, you see something like this, again, that vertical movement. And again, it's all about liquidity, but I'm trying to say things in basic ways. So, the average newbie, I know sometimes people get mad about it, but I'm saying things in a basic way. That way the average newbie can start, making money. Yes, it's important to know all the proper trading vocabularies, but it's also important to be as profitable as possible. And when you're new, a lot of times I just like to break things down. So yes, the real word is liquidity, but what you're really looking at is vertical movement, either up or down, because you're able to see the momentum. So even something like this, I wouldn't trade because the reversals are happening way too fast. But I just want to illustrate something to you. It's very important. You can see the red, green, red, green. Like I said, there's no way to know the momentum. But even worse is when it comes to these types of candles, especially if you're doing the 2-minute strategy, the way, the zero gravity method, the way I say it, or whatever strategy you're doing, right? My strategy be damned. Any strategy you want to do. If you see red, green, and let's say you enter here, right? And as you know, when it comes to trading in this style I do, where the trades expire exactly 2 minutes from your entry point, not necessarily when the candle closes, when you have something like this right here, where it's just in the doldrums, you could win or lose in any position of this candle. And the same thing applies here. Whereas, let's say you want to trade because you see the trend, you see it hitting the Keltner channel right here. You can actually see that this red candle right here is longer than these 2 green candles. So you're able to trade against. So you can win your position here. But there's no way to really determine your chances of winning a position when you have data like this. Because when you look at this, you could win in any position. Let's say you enter right here. Look at this green can. Actually, you wouldn't enter here. You probably want to enter here, right? Red, green, right? If you want to enter here, let's say you want to enter for, even if you want to enter for put position, the candle's not really moving. So let's say you enter here, right? And it gets to this candle. The candle's going, but there's no, vertical movement. You could win here. Sorry, you could win here, or you could lose here. Or even if you go to 2 minutes, right? Instead of 1 minute, you could win here, or you could lose here. So I really, I have to stress this. Never ever do when you see red, green alternating when there's no vertical movement at all. It's a real fast way to lose trades and become frustrated. You could even see it right here. Even though the candles are a lot longer, it's still alternating red, green. So you could say, okay, 50-yard pass. Let's go, right? It hits this 50 right here. Even though I necessarily wouldn't do this because it's not a strong uptrend, but let's say you want to do that, right? This is why I say you have to look at the overall market structure, because that's what I'm covering today. It's just market structure. You can see right here, right here's a green candle. The next candle is red. And let's say you enter for a call position, right? Let's say you enter right here, right? This candle closed right here. This red candle right next to it closed right here. But let's say the timer, let's say the timer expires when it's down here. Or let's say, and let's say you do 2 minutes instead of 1 minute. That you could enter here, and then you still can lose if the candle closes here, or at any position of this candle. If your trade closes right here, you still lose your trade. Because remember, these wicks are part of the candle. It's because it doesn't close there doesn't mean that your trade doesn't close there, especially if your trade is expiring exactly 2 minutes or 1 minute, whichever strategy you want to use, right after your position. So it's really important to understand, like, you want to make sure you're not in a choppy market. That's what they call a choppy market. I call it the doldrums. If it looks like this, if it's red, green, stripes, looks like a circus tent, I always say avoid, because there's not enough data, there's not enough momentum. If you guys know anything about the way I like to trade when you see something like this. You see a lot of greens, okay, a little bit of pullback, but then you can see right here, see this? This is momentum. You can trade when you see a market that has momentum. You could say, okay, it reversed at the 50 here. Okay, the next time I'm waiting for a green candle, and I'm going to wait for it to get up to about here, and I'm going to enter here for my 2-minute position for the 50-yard pass. And then boom, 50-yard, and then you got the touchdown, because there's momentum. And what I like to call it insurance, actually. I'm like, okay, it's a little bit of insurance, because the further away, and if you guys have been trading for any amount of time, the further away your trade is into your winning position, the better you feel. You feel good about your trade because you have a feeling, okay, I'm good. I'm pretty sure I'm going to win this trade. Meanwhile, if you get into a market like this, a super choppy market like this, this is when you get those candles where I call it the photo finish, where it's just moving here and here, or it's like meandering around your entry point. All it takes is one little pipette and you lose. And if you really want to become successful in binary options, every pipette matters. It's not like regular Forex where, you can see where it's going, but you have time to adjust. You don't really have that. You either win or you lose. Binary options is exactly what it says on the tin. And when you see this looking like this, all sharp and spiky, and just, when you see this and it's just, crisscrossing too many times, you can see it corresponds exactly with the way the candles are moving. Very choppy. And then also, all these dojis right here, all these dojis and small hammers. And look, when you see something like this, spikes, there are some people who trade spikes. I avoid spikes. I call spikes the minefield. You can even see right here, the stochastic oscillator. It's reflecting the fact that there's really no momentum. This is the exact same thing as a scenario like this, where you're gonna have, longer candles, or I use that term loosely right there. But you can even see in this previous example I was showing you, where was it? Right here. You have longer candles, but there's no momentum. It's not going in one direction for the most part, because you could lose or win by 1 or 2 pipettes, and it's just not a good position. There's no momentum to go by, so you don't know if you're going to trade with the momentum, and wait for that pullback to trade with it, or trade when the momentum is going to reverse. And that same exact principle applies here. They might look different, but when you see a field like this, a bunch of little dojis in a row, like, there's nothing to go by, because, okay, you might say, okay, I'm going to trade. I'm going to trade for a reversal right here. You can lose right here. Just because this candle closed way down here doesn't mean anything, because there's no real momentum. You just have a field of spikes. I call it the minefield. You can see it again here. I would never enter a market like that. You could even see the stochastic oscillator is corresponding directly with these candles. All right, so that's a choppy market. This is a stagnant market. It's just indecisive. Why would you enter a trade when the market is indecisive? No, you want to enter a trade when there's clear momentum, and a clear trend, all right, and you can see the way the trends are going. Right here, you can see we're in a downtrend. So you can do a 50-yard pass here. Say, okay, it reversed at the 50. Okay, nice long candles, but it's easier to see the momentum. And again, long candles, and they're moving vertically. They're not really moving horizontal in a horizontal pattern. That's what you want to really look for. Something like this, boom, boom. But once it gets to here, I would not trade at all. All right, and you can even see right here if you want to do the standard zero gravity strategy right here. All right, you can see even though we're in a downtrend, it's going to reverse. Okay, you can see boom, boom, nice, vertical momentum, right? And then you can see right here something like this where you see a single candle with a long wick at the bottom. You're knowing the price is getting ready to reverse. All right, so you can enter right here or right here, whichever one, and then boom, you've won your position. That's the power of seeing a market with clear momentum. A lot of people keep hitting me up and they're seeing markets like this, choppy markets. You can even see, like I said, again, nothing I'm saying is pulled out of my ass here. Everything I'm saying, you can see. You could back test it a million times. You can see green, red. You can see stochastic oscillator is corresponding with that. The sharp angles going up, it's just choppy. You want nice sine waves as often as you can find. And again, you can see that here. Choppy markets. Avoid choppy markets. You want a nice healthy market. A lot of times when I'm showing examples of where to trade, people will say, "Oh, well, you're not sugarcoating. You're cherry picking." You're damn right I'm cherry picking, because if I'm trading with my money, I'm not going to be trading bad trades. I'm going to be trading good trades. Why trade bad trades? Why trade something where your chances are going to be, here or there? You want to trade, in a position where you're most likely going to win. You want to be able to control it. Again, the markets can do whatever they want, but your objective is to give yourself as much of an edge as possible. Look right here. See this? More. Again, it looks like a circus tent, looks like a piano, whatever you want to call it. That's what it looks like. There's no clear momentum to go by. It's pretty much going horizontally. Avoid horizontal movement at all costs. All right, and look at something like this. You could see you have alternating candle colors right here, hardly any vertical momentum at all. And even though you have these 3 red candles right here, because there's no vertical momentum, it's like one of these situations, another one of those situations where you get the dreaded photo finish, where you could either win your trade. Let's say you want to do, a call position right here. You could either win your position by this small amount or lose your position by this small amount because there's no momentum. Doldrums isn't even beginning to be the word, because this is just ridiculous. Look at this. And then look at that. Pretty much that's a good, 8 minutes of hardly any liquidity, hardly any vertical momentum. Avoid things like this. I think this is around the time the markets were closing or opening. Yeah. So, of course you can't trade this anyway, but you understand. Something like this. Look at this. That is a bunch of BS. Don't trade there. It's garbage. It's basura. Don't even touch it. Look at this. Don't trade there. Look at this. No momentum. Don't trade there. You want to go for markets with a lot of vertical momentum. And when I mean vertical momentum, I don't just mean long wicks back to back or long candles as a whole back to back. Because even though it's moving up and down, there's still no momentum. This is the exact same thing you saw there. It's just fluctuating at a smaller rate. You want to get real momentum. This is garbage. Don't even touch that. When you start seeing it look like a bunch of blocks, a bunch of Lego blocks, don't even trade there. It's a waste of time. You're just going to give yourself a bunch of unnecessary headaches. See that spike? Don't trade these spikes. Avoid these spikes at all costs. See something that looks like this? See, it's choppy as hell. Look at this. Avoid a market like that. And then you can see it starts to break out of that type of market. And you can see right here, it's a nice smooth market. Let me, as you guys can see, see, Longer candles, more momentum. So if you want to do a reversal trade right here, to trade against the momentum, you see it's shifting because you can see the wick starting to form, long wicks up here. Look at that. You know you've won your position because the trend is going to continue reversing. Unlike something like this, where as you can see, it just looks choppy. It looks like a choppy mess. Try it. Okay, the trend's going to reverse. You have all this candle. You could say you want to do a put position. All of this candle right here, you lose. This candle down here, you win. Because remember, just because this candle closes here, if you're doing the strategy for a 2-minute directly from your entry point and exactly a 2-minute expiration time, you know, it's not always about when that candle closes. So you can enter right here, you know, for a for a put position. But if your candle closes here, any point of this right here, you lose. Because look at that, all horizontal. You know, forget about when the candles open and close. All of this is just a horizontal mess. And then if you look at the stochastic oscillator, it reflects that. You can see the alternating candle patterns. It's really egregious because you can not only do you see the alternating candle patterns, but you can also see how it's just meandering around the 50 line right here. And like I said, what makes this so bad is because there's hardly any, you know, vertical movement, hardly any vertical momentum. It's all just sideways momentum, just all horizontal. This means there's no way to ascertain which direction the trades are going to end up going because you don't know the momentum, so you don't know how to trade with the momentum or against the momentum for a reversal. So see this right here? You can enter right here. Say you enter right here, right? For a 2-minute trade, right? A 2-minute position. Let's say you enter right here. You think the price is going to get ready to reverse up, right? Guess what? You will call position right here. If it closes right here, you lose. If it closes here, you win. But because there's not that much vertical momentum, there's really no insurance. It's not like in a healthy market where you can like see something like this. When you enter here, see the momentum here, you enter here and see that? There's no question. You know you're going to win. It's called insurance. Avoid this. Again, you can see no real vertical movement. Alternating candle colors. Honestly, if you just see alternating candle colors every 1 or 2 candles, just let it go. Here we go. 2 red candles right here. All right. Remember, we're trending down, so you're going to want to trade. You know, you're not going to want to trade yet, so you would probably wait. But then you'd see this. Alternating candles. All right. You can see it corresponds. Meanwhile, you get something like this with green candles. Boom, boom. And then, you know, you see right here, it's not a shooting star, but I'm going to call it a shooting star because, but you can see right here, and then boom, you can win that position because there's clear momentum. And again, clear momentum for that 50-yard pass. And then something like this is super, super. I would never trade in something like this. You see this right here? Where it looks like knobs on a mixer's fader, just going any type of way. Bunch of shooting stars, a bunch of hammers, you know, a bunch of, you know, morning suns and all that, rising suns. Sorry. You could see all of that. I would not trade here. And again, you could see a crazy looking stochastic oscillator corresponds. There's no clear momentum. So you could say, okay, you know, I'm going to trade, you know, right here. It hits the 50. I want to do a 50-yard pass because we're in an uptrend. Now, if you hit right here, for the most part, you're good. But the problem is a lot of people don't hit until around here. So 1 minute, 2 minute, you could still, you know, lose. And again, because there's no clear momentum, it's just going horizontally. So you could win that, but why make your chances worse? Now, when I'm showing you these things, I'm showing you situations, even though it's a little bit choppy, you could still win because at the end of the day, you can. But it's not about can I. What you want to do is you want to increase your odds of winning your trade. Even something like this, if I wanted to trade down, like if I wanted to trade against the, if I wanted to trade, you know, for the reversal, you can see this, a sea of spikes. Avoid those. I would never trade there. All right, and let me show you some more positions right here that I would never enter. Something like this, you could see there's clear momentum. Got the 2 greens, 2 reds. You could see, boom. Now we're in a clear uptrend right here. So much of an uptrend that it's reversing at the 20-yard pass, if you want to call it that, right? So that's cool. But then you get to this part right here, alternating. See how it just goes horizontal? It's just going horizontal. Why would you enter any trades when you see there's no clear momentum? There's no momentum to trade with. There's no momentum to trade against. Meanwhile, you can see right here, a beautiful reversal right here. You see the long wick at the bottom. Boom, John Wick, there he is. You can even see it's a little bit smoother of a curve. Even right here, a little bit smoother of a curve. But then the uptrend just becomes so strong, and again, it's just reversing at the 50. So if you hit the 50-yard pass right here, boom, you're winning. You're winning for a long time. You can do a 5-minute trade, do a 10-minute trade if you want right here. It's crazy. Right here, a standard zero gravity reversing, at the other side of the Keltner channel, right? You win, right? You need to see the momentum in order to trade with the momentum or against the momentum. And that's pretty much it. It's not super complicated, but what it all is it's all about market structure. You have to not just look at where you're trading. You have to look at the overall picture. So right here, you can zoom in, you can zoom out, and you can see at a further, step back. It's like a mosaic. Step back a little bit so you can see the full picture, as I always say. And you can clearly see, okay, we're in a downtrend. My bias. Oh, and by the way, speaking of downtrends, a lot of people have been asking me why I don't show the 200 moving average anymore. The reason is because I don't really use it anymore. I'm so good at identifying trends now without it. I don't really need it. But you can see we're in a heavy, heavy downtrend right now. Heavy downtrend. So anytime you see, okay, there's some momentum going upward. Oh, look at that. 50-yard pass, win. 50-yard pass, win. 50-yard pass. And you can see the stochastic oscillator is reflecting the real momentum that you can see. Meanwhile, look at this. See that? Horrible. Avoid like the plague. Do not trade in choppy markets because it's not enough momentum to go with. This right here is beautiful. Look at this. Now you'd be wondering, okay, when do I enter? When you see something like this, a super, super long wick at the bottom, all right, we're in for a nice reversal. And just as I said, boom. You can even see the crossover in the stochastic oscillator. See how smooth that crossover is. It's not choppy. It's not looking crazy. This right here looks crazy. Like, what the fuck is going on? Don't do that. Avoid. You can see right here, it's just choppy. Alternating candles. You see a lot of wicks here. It's just, spikes here. It's just not worth it. I would avoid that at all costs. Don't trade those types of markets. You want to trade where you see clear momentum. Something like this, you see skating at the top. Avoid those. So I don't just mean, when I say horizontal, I don't just mean it's going directly in a flat line. Because if you really zoom in, you can see these candles don't always close at the exact same time. However, for the most part, the motion is very horizontal. I would avoid those. What you want is clear vertical movement. Boom. And I don't just mean vertical movement in a trending market. Something like this where it's ranging for a little bit, it's still, it's ranging, but lower highs and lower lows, something like this. It's slightly ranging, but there's still momentum. You can still see a momentum. That's what you want to look for. You want to look for markets where you see momentum. How are you going to trade with the momentum if you don't see it? How are you going to trade against the momentum, waiting for the momentum to shift if you don't see it? There's no data there. It's worthless. This whole section right here, I would avoid. This whole section right here, I would avoid. Choppy ass markets. Get them the hell out of here. They're your bane of your existence. Treat them like they're invisible. If you see that on the chart, don't even bother with it. Leave it alone. Dub them. Like if you're trying to dub someone who's lame, just the same exact scenario applies. Ladies out there, you have these dudes, they always bother you every day. Ignore them. Ignore them. Right here. Choppy market. Avoid. A little bit momentum here, so you're a little bit better off. But slight momentum. I still wouldn't mess with that. And you can even see right here, You see how there's a clear momentum? Now, there is a green candle in this movement. However, for the most part, you could still see vertical momentum. And then boom, John Wick, you're good to go. All right. So again, nothing's an absolute, but what you want to do is you want to put, all of the, as much edge as you can in your back pocket. And again, I'm just showing you these examples. This has been just, 20 minutes of me showing, almost 30 minutes of me showing these examples, but it's for a reason. Because when you start to recognize markets you should trade in versus markets you shouldn't trade in, it becomes so easy to know I shouldn't even trade. People always message me, why are you not trading at this certain time? What time do you trade? And I always answer the same thing. I say, whenever the markets look like they're good enough to trade. There's no magical moment where every trade you make is going to do well. You can see right here, nice vertical movement, nice momentum here. Boom, 50. Boom, 20. And you can win at the pullbacks. But if it's something where it's just moving, sideways, like why bother with it? Even when it's like just meandering around the 50. It's just, there's a clear distinction I want you guys to know. When it comes to 50-yard pass, I don't mean every time it hits the 50, do a reversal. Because you should see something like this. It's just meandering around the 50. Let's say you want to enter for a call position. Let's say you enter here. Okay, you could win 1-2 if your trade closes up here, but you could also lose down here. Why would you give yourself poor chances of winning? This market is perfect for the 50-yard pass. You can see there's a lot of vertical momentum. 20-yard pass right here, 20-yard pass right here. And when you do the 20-yard passes, I don't recommend them for beginners, but you have to really know that you're in a very strong trend, and then you can see it reversing here, 50, 50, and then it reverses back lower. For the most part, you can see it's a clean market, a nice, healthy market, as opposed to some BS like this, where you can even see the stochastic is corresponding. Stochastic corresponds. So even if you're someone who doesn't understand, price action, if you don't understand market structure, well, this whole video was about market structure. If you don't understand market structure to see that you're in a long-standing trend, or you're in a ranged market, uptrend or downtrend, if you don't even want to understand that, if that's too complicated for you, what my biggest takeaway from this video, look at the stochastic oscillator. When it just looks messy, crossing, zigzagging, all which type of way, you can see, and you can do this on your own, guys. I dare you to do this. Every time you see it looking crazy, looking wild, you can see that the candles are just doing whatever the hell they want to do, and it's just not worth getting into that market. It's annoying. Again, look at this. Avoid. Look at this. Nice, healthy. Boom. Then you see this. Momentum kind of slows down. I would avoid. All right? Momentum right here, pretty horizontal. I would avoid because you don't know which way it's going. And usually when you see things like this, it's an indicator that the price is getting ready to reverse. Like, not the price, but the trend's getting ready to reverse. You see this choppiness right here? All this is really a baby ranged market. It's still a ranged market, but it's a ranged market on very small time frames. That's all it is. If I were to take this little section right here, I don't know if it's still gonna be at the same section, which kind of sucks, but I want to see. I want to try. If I take this into 5 seconds, let's see. Man, unfortunately, I was not able to go right exactly back to where I was. But you can see all that is it's just a ranged market, but on a very small time frame. So it's ranging. I'm really drilling into it because, a lot of times I get these messages and I see these choppy markets. See, this is choppy. Even though it looks like it might be going, it's going up very slow. So there's no real momentum. Just long candles. Avoid. It's not worth it. The juice just ain't worth the squeeze. All right? It's just not worth it. There's no point in getting all these photo finish that you could win or lose by one pipette. Meanwhile, you do something like this, you're way in the clear. Do a 50-yard pass right here. You're way in the clear. You're sky high. Smooth sailing. The sky is blue, clear waters, you're drinking, you have your coconut, your pina colada, you're chilling, whatever it is, right? And you're just loving life. Right here, this is that choppy water. I would avoid choppy water. Right here, choppy water. It's dark, it's murky. You really don't know which way you're going and see, right? So, and again, I like to apply um, things that the layman can understand because I feel like, it helps you out because you can clearly see, okay, this is choppy water. I'm not sailing here. Nice clear blue skies. All right. Here we at this candle close at the top. Generic, standard, not 50. It's generic. You know, zero gravity strategy. Boom. It's a downtrend. Let's go, baby. And you win your trade no matter where it is. You see, always look for momentum. That way you can trade with momentum or against it. You see momentum like this? Nice clear blue skies. Nice stochastic oscillator lines. You can see sine waves. You know, when the price is like this, ooh, avoid, man. Choppy, muddy, murky waters and hurricanes and everything just in your way. Just avoid, just avoid it at all costs. Just, you know, don't even bother with it. Here, right here. Look at that. Choppy. When it looks like this, spiky, avoid it. All right? Avoid it. Avoid it. Avoid it. That's how you can understand market structure, because at the end of the day, that's what I was showing you. I didn't say it at the beginning because I didn't want to, oh no, here's another vocabulary word, but that's just understanding market structure. That's knowing the type of market you're in. If you're in a nice, healthy market, or if you're in a market that's just going sideways with not enough information, that is the best way to see. And again, if you don't want to, learn all the vocabulary words, if it's too much, just look at the stochastic oscillator. If it looks like something crazy is going on, it's because there's something crazy going on, and avoid. All right, guys, that's going to do it for me today. It's a lot of fun, especially because the more I teach it, the better at it, more proficient at it I become myself. So I enjoy it. All right, guys, have a great day. Stay safe out there.